Hey everyone, welcome back to Corporate Decoder, the place where we dive into the sometimes dull world of corporate filings so you don't have to. Today, we're cracking open Melar Acquisition Corp.'s annual report. Don't worry, we'll make it interesting even if it means facing some head-scratching accounting along the way. Think of this report as a company's yearly confession. It's where they lay out all their financial details. Melar Acquisition Corp.I is what's called a blank check company, or SPAC. That means it was created to find a private company to merge with called a business combination and bring it to the stock market. It's like a dating app for companies. The report is full of forward-looking statements, so it's good to keep in mind these are just management's best guesses about the future. There's no guarantee of success, as among other considerations, their success is heavily dependent on completing an initial business combination. The company's units Class A, ordinary shares, and warrants trade on the Nasdaq. Warrants? Those are like coupons that let you buy shares later at a set price. If the stock does well, it's basically free money. If not, you are out of luck. They have until June 2026 to find a company to merge with. If they can't, they have to shut down the business and give the money back to investors. There's also a rule, a Nasdaq requirement, that they have to complete their initial business combination within 36 months. They're hunting for a target in the emerging finance sector. That covers things like retail finance, specialty finance, and financial technology or fintech companies that are growing fast and using tech to shake up the traditional finance world. According to the International Finance Corporation of the World Bank, there's a $5 trillion demand for credit from micro and small businesses in emerging markets alone. Melar intends to focus on the sectors where tech is making the most difference in developing financial stability. That is areas such as MSME finance, specialty finance, renewable energy financing, and digital payments. The company's management team has communicated to their network that they are looking for a potential business combination. They're relying on their connections to find a good target. This is how business gets done. There is a stipulation in the Nasdaq rules that any initial business combination must be approved by a majority of their independent directors. This is meant to ensure that the directors have your best interest at heart. Here is an important detail. The financial statements included in this filing do not reflect the correction of an error. This seems like it would be obvious, but it must be confirmed and documented every year. Now let's check the financials. Remember, Melar is a blank check company, so we are not expecting huge revenues just yet. For the period from March of 2024 through the end of the year, they had net income of $4,209 and of up to $39. This income was made up mostly of interest from money held in their trust account. Cash used in operating activities was $545,234 for this same period. This was offset by their net income and payment of formation costs by their sponsor. This shows that the company can manage its expenses well. They have a little over $164 million to work with for a business combination. That's a decent chunk of change to make an acquisition and help their target grow. It is good that they have funds available to complete this initial business transaction. Luckily, as of right now, there are no legal proceedings that are currently underway or expected against the company. Always a positive. As of March 2025, there were 16 million Class A ordinary shares and over 5.6 million Class B ordinary shares outstanding. Drilling down into who actually owns the company, Gautam Ivaturi and Eric Leifshitz are shown as the beneficial owners of most of the shares as part of Melar Acquisition Sponsor 1 LLC. Keep in mind that beneficial ownership doesn't always translate to direct control. Of First Trust Capital Management LP owns 10% of Class A shares. It is good to see diversity in investments, as this can be beneficial to the company. We should also note that there are no material legal proceedings in which any director or executive officer is involved. That's always good news. None of their executive officers or directors have received any cash compensation for services, but the management team is entitled to be reimbursed for office space, secretarial support, and out-of-pocket expenses. It's good to know these are all laid out clearly for investors. One more thing to note, there is no disclosure regarding foreign jurisdictions that prevent inspections. This means they have no issues with regulatory bodies preventing them from operating. Now, what's the overall take on Melar Acquisition Corp? Well, they're in the risky business of SPACs, which is an inherently volatile space. They are looking for businesses that are right for the picking in emerging finance. The clock is ticking for them to find a suitable business combination to take public. The key strength here is that the management team has a clear well-defined area of expertise, and seem to have access to a good professional network. The notable risk stems from their dependence on completing the initial business combination within a specific time period, as if they fail to do so, their assets will be liquidated. All in all, Melar Accession Corp presents an interesting case. I'd say it's something to keep an eye on, particularly if you're interested in the future of finance. If you found this deep dive helpful, please subscribe, like, and leave a comment. Thanks for watching.